December 2016, I was running GPU rigs around the clock. RX 480s, RX 580s, 1060s, 1070s, 1080s. Mining Ethereum and buying both AMD and NVIDIA stock at the same time. One night I posted this chart to a friend. He was a diehard Intel and NVIDIA guy. Anytime I brought up AMD, he shot it down. I told him Zen and Vega were going to send it flying. He wasn't having it. That argument was 4,893% ago. Today we go through the filings. Before we get into it, nothing here is financial advice, just my opinion. You just saw the backstory, the mining rigs, the argument, the 5,000%. Here is what matters now. With AMD trading at $580 today, our valuation model puts fair value closer to 90. That gap is what this episode is about. And if you learn something useful, go ahead and like the video. It helps the channel grow. Think of AMD as the engine supplier every car company secretly buys from. Meta, Microsoft, and Google build some of their own AI chips, but they still can't make enough, so they buy AMD too. The business breaks into three pieces: data center chips for AI servers, client and gaming for your laptop, and embedded for industrial equipment. Data center is the growth engine. Look at this run. AMD bottomed near 190 in March, tripled by June, and just broke out again today. Up 7.7% in a single session to 581. That's on heavy volume, with the stock trading above every major moving average. Momentum is real. So is the question of how much further it can stretch. Revenue over the last 12 months, $37.5 billion, up 38% year over year. Free cash flow, $8.57 billion. Let me say that again, because Wall Street is still modeling this the old way. $8,574 million in free cash flow in 12 months. Strip out stock comp and owner earnings still comes in at $6.8 billion. AMD is sitting on $12.3 billion in cash and short-term investments against just $3.2 billion in total debt. That's a net cash position of $9.1 billion. Current ratio, 2.7 times. This is not a company that needs to raise money. It's a company that could buy back a meaningful chunk of its own stock if management chose to. Gross margins swung hard this year, from 39.8% in the second quarter of 2025, when AMD actually posted an operating loss, up to 54.3% by year-end, and it's holding near 53% right now. That's not noise. That's the AI data center mix taking over from lower-margin PC chips. The trend is the story here, not any single quarter. OpenAI and Meta didn't just place orders. They took warrants, up to 160 million shares each, priced at a penny, vesting only if AMD hits GPU purchase milestones and stock price targets. That's as close to skin in the game as a customer gets. Wells Fargo just raised its target to $615, and options traders are loading up on calls ahead of August earnings. Run the trailing owner earnings at a base case 20 times multiple. Fair value lands around $89. The stock trades at $581, 6.5 times our base case. For today's price to work at 20 times, owner earnings must grow 21% a year for a decade. That gap is the growth premium. It only closes if everything goes right. If this research saved you an hour of digging, a like tells me to keep doing this. 3 reasons the bulls have a real case. 1, this isn't an NVIDIA-only story anymore. Meta, Microsoft, Google, and OpenAI have all signed multi-year AMD roadmaps. 2, revenue grew 38% year over year last quarter, with margins expanding as data center mix grows. 3, $9.1 billion in net cash and $8.5 billion in free cash flow means AMD can fund this build-out without diluting shareholders. 3 risks worth taking seriously. 1, the stock is 111% above its 200-day average, historically extreme, even for AMD. 2, forward earnings estimates assume net income roughly quadruples within a year. Miss that, and the multiple re-rates hard. 3, the $600 OpenAI warrant level sits right above us, and with a beta of 2.5, a market pullback hits this stock twice as hard. Priced in dollars, AMD looks like it's up almost 5,000% since 2016. Priced in gold, the currency that doesn't get printed, It's up about 14 times. At today's spot price near $4,065 an ounce, one share of AMD buys 0.1433 ounces of gold. Back in 2016, that same share bought about 1/100th of an ounce. Real terms, still a monster move. Here's the scorecard. Balance sheet, revenue growth, and smart money all pass. Margin trend is mixed. Gross margins expanding, operating margins flat. Valuation and risk both fail. Pass on 3, fail on 2, watch on 1. I show you the data. You make the call. Every episode, one stock, one honest scorecard. We show you the math. You make the call. For AMD, the business is real, the growth is real, but so is the price you're paying for it right now. This is the Think Tank Trader. Do the research. Own the conviction. See you next week.